What's going on, YouTube? Welcome back to another video. The market was mixed today, and we had a lot of choppiness. A nice reversal up at the end of the day, though. That was nice to see. And the Nasdaq, the S&P 500, the Dow Jones, all down today as well, in anticipation to the rate cuts, what's going to happen, how to be positioned, what could happen with certain stocks. We're going to talk about all of that in this video. So with that, let's not waste time. Let's just jump right in. So what did our portfolio do today? Again, all the major indexes were down, but we eked out a small profit. And I told the Discord just jokingly that we eked out just enough to get a nice dinner, but nothing meaningful beyond that. But that's okay. Sometimes days are like that. In fact, at the start of the day, we were down about 4K. So eking out with that small profit on the day was not bad at all. If we did have this red day, if this was the red day that we expected, I would not be sad at all. Yesterday was a 10K day. So losing 4K on the day is nothing major. We still end up on top at the end of the day. So rate cuts and positioning ahead of the rate cuts. What are investors doing right now? Well, it's clear that based off of market news, we can see that investors are very high on or low on cash. 3.9% it stayed at this area, and they're expecting a lot of growth since October 24th, actually. So there's been a lot of growth and expectations coming into this market. Bank of America's long-running monthly fund manager survey found the percentage of investors in September who were overweight stocks at 7-month high of 28%, even as record 58% find them overvalued. So even though record 58% find all stocks overvalued, there's still a lot of people that are overweight stocks in this time period. So that's an interesting thing to watch for. Bond yields are also under pressure because with the rate cuts, that's going to tend to push investors toward more yield-oriented equities or growth sectors. And, the market's really watching very closely the Fed's forward guidance. It really matters on the rhetoric behind why there are going to be cuts. Will there be signals about how many cuts are coming? That's also what people are going to be watching for. That's what we want to hear from Powell as well. And how gradual versus aggressive will they be? Because that goes hand in hand. If the cuts are coming and they're aggressive, that's going to lead to also some more caution and fears of a recession coming up. And so really it's just the wording of the sentiment that really counts. We know that Powell never really wants to push the market up, so that's great. You want to have a Fed that is impartial like that, because there are other things at play than just the stock markets, inflation data, labor market data. It's really meant to help support the day-to-day individual. So that's what we're going to be thinking about as well. But what happens typically, historically speaking, in times of a rate cut? Well, in the short term, it's interesting that volatility tends to increase. Some profits taking happens right before a rate cut, and there's really just mixed performance that it brought out here. Markets often pause or pull back slightly as traders digest what the cut means and what the Fed signals for the future. And then 3 to 6 months out, it mentions here that equity markets often do well following the start of a rate cut cycle. For example, Northern Trust since 1980, in the 12 months following the beginning of a cutting cycle, the S&P 500 averaged 14.1% returns. So that's significant as well, and that's an average of 14.1% returns. More than likely, we might see something a lot higher than that. But long term, 1 to 12 months, it's always benefiting the market when rate cuts are part of successful soft landing. Equities tend to outperform, and interest rates, sensitive sectors, real estate, consumer discretionary often do well as well, and bond yields tend to decline, making fixed income less attractive, but ultimately boosting present value for future earnings. So those are some interesting things to consider. Now, to also consider is how we want to play some of our stocks. Some of the stocks that are very popular and that people are in today are, for example, Tesla. We marked out some of the levels as well, and we've shared this with Discord. But Tesla has a nice runway to go up here. There's not a whole lot of levels stopping it. It could be at 440 before we know it, and 465 before we know it. And at that point, we're not too far from all-time highs. Transversely, though, if things don't turn out as well, we can come down here, and more than likely we're going to fill these gaps down here. So Tesla can actually also drop and come down to some support at 368. So that's what we're seeing. Palantir is another one that has all the eyes on it as well. Palantir has found a lot of stability right here in this zone, coming down from 162 to the 150 zone. A lot of support in this area, and we see that it broke out of this area and is trending higher, and it's trying to trend higher. So we can particularly see some levels of resistance for Palantir, but yeah, it'll be interesting to see how this plays out with the rate cuts, because Palantir can, it's one of those stocks that can continue going no matter what the fundamentals are saying, and it just continues to be in price discovery at this point afterwards. So, but it'll be interesting too, because we also have some levels to look forward to where we are right now with Palantir. We just filled this gap over here. So signs do say that, it could be likely that we can go higher. In the short term, we won't know what will happen, but yeah, Palantir can come back and meet up these highs, but it could also be range bound for a while. More than likely, that is what will be happening long term. But 191 to anywhere from 142 can be within that range. So coming over to SoFi, another popular stock everybody's always looking into, very heavy position for us as well. We're seeing SoFi is at some highs right here. Yesterday, SoFi was moving a lot, and today we kind of fell down. SoFi was down 0.9% on the day. So that's not a huge drawback for the, I think, 4% that it went up yesterday. So 0.9% isn't too bad. But as far as levels that we could come and see here with SoFi could come down to the 2368, 2374 levels. It can come down to 2669 as well. More than likely, it's not going to drop straight down through 2664, this area, 69 area. It'll more than likely stop around here, and then if it wants to drop down further, it will drop down further. But SoFi has a lot of momentum going for it right now. At some point that will stop, and a pullback is expected, especially for a stock that has been going this hot. So coming over to Meta is looking quite nice actually. It's been in this range from 798 to around 721 or so. It's high close to the 798 level. I'll be watching this, but trading a quick put wouldn't be terrible, but is not something I will actually do. But I also believe that Meta long term will probably around $1,000. It's on its way to. So it was up 1.87% on the day today, and some of these levels we can see Meta could trade around these levels and come down even as far as 691, but that won't be such a huge thing. We can see how far low it was since Liberation Day. $479 is where it was at, and now it's at 779. So we're closing in on all-time highs with some positive news and the rate cuts. We can go ahead and start creating some more all-time highs for Meta. So coming over to Amazon has been performing very well in the last few weeks, up 1.13% today. With some good news on the rate cuts, we can probably see some all-time highs for Amazon. And some of these levels, though, in the short term, especially if we get some choppiness and volatility, we can see Amazon come down to 226 or so. That's not too uncommon to see Amazon trading in those areas, but any drop in Amazon to me is a buy. It's a no-brainer buy, and yeah, that's what I will be doing. Adding into my positions, my call options, and my shares. More than likely, just the call options as well. We're not made out of money, unfortunately, but we will be taking the opportunities when we see them. Coming over to Apple's really been, carrying the market as of late, and we talked about this in Discord. So it's nice to see it playing out. Apple was being kind of slept on in terms of the big 7 stocks and the Magnificent 7. So it was the lagger for a while, and it's still the lagger, but nonetheless, it is still moving, and the market's been down a lot. But here we see Apple coming in on all-time highs, so that's nice to see. We got all-time highs over here at 260, but yeah, even from peak to trough over here, if you were in on Liberation Day, you would be still, up quite nicely. Not as much as if you were in a SoFi or a Meta, right? But a little something as of late. So in terms of levels, there's good support here at 226, as well as there is a gap here that could be filled in this area. So 220 could be filled for Apple. So don't be surprised if we see Apple in the short-term run down here if there's volatility, but more than likely it'll be still coming back up to these levels. And yes, that will be a great play to take out. So we'll be watching for that as well with Apple. Coming over to Nvidia is, the Nvidia. It's been down today, 1.61% on the day. Have support here on Nvidia at 164, up to 184. So Nvidia is probably going to be range bound for a bit, but with good news, we may break out in the short term and capture some all-time highs. But if the news is more so tempered and negative a little bit, we can see Nvidia coming down, and some of these zones right here, 153 and 142, would be some spots to look out for. And coming over to Shopify, our darling play that we've come into and we've shared with YouTube and Discord. This one we got in about last month, and we came in right before this huge gap up. Literally, I entered the trade and then 2 days later, we were up about 70% on our call. So wonderful to see. We're still holding that call. We wanted to see this gap get filled, because I believe that all-time highs can be back in play once this is filled out. But it's been moving like a thing of beauty so far. The gap was filled 50% to the T, in fact, and we are going and flirting with these levels, the 150 levels, for the last few days. We can go ahead, if we have some good news, Shopify will be affected in a positive way. So that kind of wraps it up. One more thing we did want to share with you all, just my portfolios, this public portfolios, cumulative shares. What has the S&P 500 done in the same time, and the NASDAQ done? You can see right here 13.54% and 16.29% respectively, while this portfolio has gone up 55.45%. So we're definitely beating these major indexes, and that's going to continue to happen. Let's take a look right here on a 1-year basis. We're up 129%. The NASDAQ is up 27%, and the S&P 500 is up 19%. And on a 3-year basis, we are up 203%, and the NASDAQ is up 97.74%, and S&P 500 77%, which is great. These are respectable returns, but we're just respecting the heck out of it a lot more. So that's what we love to see. And on max basis, and max is only from 2020. We're not really counting since I was in the markets with this portfolio much earlier. So NASDAQ 160%, 160%, and the S&P 500 123%. Those are incredible gains. But we're up 730%, and that's what we do on a regular basis. So if you want to be able to work with me, if you want to be able to get my trades, my options alerts, my just my knowledge and one-on-one support, go ahead and check the links in the description. And yeah, with that, we'll catch you guys on the flip side in the next video. Hope you guys enjoyed, and we'll see you next time.